Welcome to this edition of Insider Secrets, the weekly podcast that turns real estate investing goals into reality. Each show, we interview guests who are seasoned real estate professionals, actively closing and managing real estate deals. Mike is the founder of My Core Intentions and would like to help you make your real estate investing dreams a reality. Mike coaches you to buy investment real estate, creating short-term cash flow and long-term wealth. Your host and real estate coach, Mike Morawski, has more than 30 years of real estate investing and property management experience. Here's your host, Mike.
Hey, welcome back, everybody, and good morning. This is Mike Morawski, and I am going to start to take some time and record a podcast on my own and kind of share some secrets of the multifamily business with you. I have a lot of things that I'd like to talk about that I haven't had an opportunity to talk about with my guests from time to time. So I want to spend some time just focusing in on giving you some information, some knowledge that's just going to help you on your journey and help you whether you are brand new in the multifamily business or whether you're just starting out or whether you've been in the business for a while. So I'll take some time and talk about strategies, a lot of strategies that the most successful operators in the multifamily business use and how they build their portfolios. So if your desire is to build a large portfolio of multifamily units and to syndicate them along the way, then you're going to want to listen in. You're going to want to watch as we go through the next several sessions, tips and techniques and a little bit of training for you. But in this video, I'm going to talk about the three most important fundamentals in multifamily investing. After being in the business for 30 years, I really believe that there are three critical points, and maybe even four, which I'll cover a little bit further on, that are important in building your multifamily business. As I said, whether you are brand new, just getting started in the business, just trying to learn what to do and how to do it, or whether you've been in the business for a while and have some assets under your belt, I think that these are key principles to really think about and work on for yourself. The first one I want to talk about is relationships. I just believe it is so critical for us to have great relationships. Relationships are not just with one type of individual, but multiples. Let me ask you, do you remember the game show, Who Wants to Be a Millionaire? The three lifelines in that game show. In the multifamily business, your biggest lifeline is relationships. Who can you call? Let me dial a friend, right? That was one of the lifelines in Who Wants to Be a Millionaire. This business is entirely about who you know and how you get to meet other people that you need to know. And our relationships are such a critical aspect of the business. So when you're looking for a deal, you're going to need to have relationships with brokers for deal flow. And we have to call up brokers and we have to know our buying strategy and we have to know what markets we want to be in. And we want to call those brokers. And I always say, hey, there's 5 or 6 major brokers in the US. We have companies that are Marcus and Millichap, and you have CBRE and Berkadia and Walker Dunlop and Cushman Wakefield. And what you want to do is you want to reach out to the multifamily brokers on that team at those companies and start to develop relationships with them. If you're in one specific market, and let's just say that you're in the Florida market in Tampa, or you're in Dallas, Texas, or Tulsa, Oklahoma, whatever market you're in, go to each of the brokers at the major brokerage houses and build relationships. Get to know them. Let them know who you are and what you're looking for and your investment strategy. Ask them to put you on their buying list. What you want to do is you want to make sure that you're getting a continual good flow of deals across your desk. The other part of that is that there are plenty of boutique brokers in the markets too. If you look at Florida, you have Franklin Street in Florida. In Texas, you have GREA. And these are those boutique brokers that you get the ability to build relationships with them as well. The other people you want to build relationships with when you're looking for deal flow could be wholesalers. There are wholesalers out there that don't just focus on the single family business, but they have a focus on the multifamily business as well. And by building relationships with them, you'll stay in front of them to find those new deals coming on the market and having that opportunity to buy off-market deals. Sometimes that's the best property that we can buy is an off-market deal. Also remember, when it comes to building relationships, you have service providers. Service providers are going to be your lenders, your insurance brokers, other vendors, contractors, people that you need to have those relationships with in order to be able to have them quote insurance, quote your loans, quote your construction work on those properties. Those relationships come down to really having close interactions with those people. And then, of course, the most important relationship that you need to build, especially when you're building a multifamily syndication business, is the private investor, the LP. That's that investor that's going to invest in your property, that's going to fund your deal for you and help that grow. They're going to partner with you. I'm always looking for those LPs, those limited partners that want to partner with me in one of my offerings that I bring to the market and share in the profits. So, hey, networking is critically important. You could be at a real estate networking event, or you could be at a networking event for the job that you work in, or just some other type of mixed professional networking event, and you get into those conversations. And I always tell people, I say, hey, when we're building relationships, always focus on the other person. Focus on building the relationship with that person. They're ultimately at some point going to ask you who you are and what you do, and make sure you have that 11-second elevator pitch put together. Let me give you an example. If I'm at a networking event and I'm talking to someone and I'm building that relationship, and I'm asking them about their family, and I'm asking them about their job, and I'm asking them what they like to do. Have they been on any good vacations? What goals do they have for themselves? I'm really pouring into them and finding out about them and figuring out how I can add value to their world. What if somebody says to you, geez, I wish I could take a vacation. I'm so busy at work, or I'd like to be doing something else, or I don't have the money. You're looking for that place that you can drop in. Hey, I'm a real estate investor. I partner with people like you to share in the profits to help you create more cash flow, more generational wealth. How do we serve the needs of those other people? So 11-second elevator pitch, here's what I tell people. Hey, I'm the chief investment officer for a multifamily hedge fund. We buy large apartment complexes in specific markets around the US, and then we partner with people just like you to share in the profits. Is that something you'd be interested in? So you know what? At that point, somebody's either going to say to you, yeah, I'm interested, or no, I'm not, or it's not going to matter to them. But you're going to be able to tell from that short little conversation, is that somebody who's going to be an investor with you either today or somewhere down the road? Remember, when we're building the relationships, especially with limited partners, we're not going to see immediate result from those connections. It's going to be time. I act like a farmer. You have to plant a seed and you have to harvest that seed. But to get to the harvest, there's that nurturing process along the way. So what you need to do is you need to meet somebody, put them into your database, and then nurture that database, because at the time that you bring a deal to the market, you're going to want to harvest that. This business is clearly a function of capital. And what we do as a multifamily owner operator, as a syndicator, it's a function of how many people do we know? How do we raise money? What techniques and systems do we use? And I'm going to talk a lot more about that on the third critical point. So the second critical part of building a multifamily business is that you need to invest in yourself. You need to learn the underwriting process. You have to understand the flow of money in any real estate offering, in any real estate deal. What happens here is that we have different components in the syndication business. When you're putting together an offering, when you are managing an offering, when you are buying it, there's a lot of things that go into it. You have to find it, you have to source it, you have to underwrite it, do the due diligence on it, go to contract on it, take care of all the things along the way to get to closing, and then the operations. And we're not all good at everything. Whether or not you are going to be the underwriter on your team or be that critical person or partner on that team, underwriting is really important, because you have to understand the money, understanding the flow of money, so that you can convey that to your limited partner. You want to be able to talk to that partner in a manner that's going to cause them to really see what you're doing in the business. This is your business plan. Underwriting is your business plan. It's how we look at everything from the purchase to the construction, to the financing, to the rent growth, to the expense control, to the cap rates. This is how you plan your exit plan. We need to know what our exit plan is before we ever get to the closing table. And we do that by understanding the flow of money through the underwriting process. As I said, even if you're not the underwriter on the team, you need to understand how that process works and what has to happen along the way so that you can continue to convey that to investors, because your investors are going to ask you about that process along the way. When you're talking to an LP, it's important to understand all the fundamentals behind that process. How did we get to the projected rent growth? Can you support the data? Where did that data come from? Was it just data that you did research on Google? Was it data that you got from a CoStar report because you got that from a broker? Or was it data that you got because you subscribe and pay for data? Investors a lot are going to ask you questions like, what's the cap rate going in? What's the cap rate going out? And unless you understand what cap rate is, how that works for you and how it works going in on the deal, coming out on the deal. How can you convey the information then to those potential investors? I had an investor ask me over the last week or so here, what was my projections for rent growth and how did I get to those ultimate projections? What got me to that point? And I was able to support the data. I was able to back it up because I said, I have this source where I get paid data and I can see on a quarterly basis what the projections are for the next 12 to 60 months. And I can gauge my rent projections based on that data that comes in. So where's the information coming from and how do you support it? Can you talk about the return? In my underwriting process, I have a block that comes out and it's my investor yields box. So what are the returns that I'm getting to my investors? And if you're a passive investor listening into this today, I don't like to bring anything to the table or offer an opportunity out there that I can't provide a mid to upper teens return for my investors. So I like to bring an opportunity out that's going to pay about 15% a year on average IRR. And there's that difference between ROI and IRR. And I'd love to explain that to you. If you have a question on it, reach out to me and I can answer that for you. But being able to convey that. And so I really like to deliver three things to my investors: cash flow, short-term cash flow, long-term wealth, and building generational wealth. So what are the tools that we can use with that? What tax planning strategies can we use with that as well? Whether that be as IRAs or whether it be 1031 exchanges, there's different vehicles that we can use to help create even better generational wealth, to eliminate or soften tax consequences from capital gains. But how are you getting those projections? As I was talking about that cash flow, I'd like to provide 7% cash flow to my investors. That generational wealth, I want my investors to be seeing a buildup of 17% a year and doubling their money every 5 years. If you know anything about the rule of 72, it says that the basic rule around it is at 8% interest over 7.5 years, you'll double your money. But if I can double my investors' money in 5 years or less in some cases, then I really have a great offering to bring to the market. So be able to talk about that and share with your investors how you can benefit them short-term, long-term, and then actually the tax preventative measures that are going to help them create more short-term wealth and long-term gain protection through the tax planning strategies. One of the tax planning strategies that we use today is doing cost segregation so that we can take advantage of bonus depreciation. Now, there's a whole strategy and a whole science behind those things, but what it does is it gives us the ability to put more cash throughout the year in your pocket as an investor, and it helps to create more long-term wealth over time. This is how we build confidence in our offerings, is understanding that underwriting process by being able to be supportive of the data, supportive of the information. When we talk to those investors and build that investor pool around us, it is important to understand the information, the underwriting process, where we're getting the data from so that we can convey that. That's one of the biggest keys in raising capital. So we're going to take a little break right now. I'm going to talk about one of our sponsors for a minute. One of our sponsors of this podcast and of our annual Multifamily Summit is CoStar. CoStar is a great source of data. CoStar is a platform that gives you the ability to research properties, property growth, rents, rent growth, projections in markets, market specific. It's a data-driven platform. So when you're working with a broker and you get an offering memorandum sent to you, ask the broker to print you a CoStar report or build a relationship with a CoStar representative that can help you get that information. And this way you are having good data that you can put into your underwriting, which we've been talking about. You'll have good data to share and be supportive with your limited partners as you're raising capital. But CoStar is one of those platforms that really helps you build your business. Now, look in the show notes here today because I want to refer you to Tyler Check. Tyler is the CoStar representative that I use. He's from Green Bay, Wisconsin. Love Tyler. He stepped up a couple of years ago and spoke at the summit and just pulled him out of the audience. And he took 15 minutes to tell us about CoStar. And now they're a sponsor of this podcast and of our annual summit. And I love that. So reach out to Tyler Check. His information is in the show notes. So make sure that you get that and give him a call. Okay, the third critical fundamental in building a multifamily syndication. And remember, we've already talked about relationships and we've talked about underwriting, but the third critical component is raising capital. You know, everything that we do is a function of capital. in the multifamily space. I believe in those first two strategies a lot, but this strategy, this principle, raising capital, is most important. I teach people in my coaching program that when you start to make that decision, hey, I'm going to be in the multifamily business, I'm going to be a multifamily owner operator, I'm going to own 500, 20, 2,000 units, or whatever your number is, the goal you're setting for yourself, that raising capital is something you have to do. There's certain groups of people that you're going to raise capital from. But I like to just say that who you're going to raise capital from is everybody you come in contact. You may not like some of the strategies that I talk about and some of the techniques, but this one is really important. And it's a great example of how the successful owner operators really build their business. So I think there's two parts to this, and there's two parts I'm going to break down in the raising capital portion. First, I want to talk about being a fisherman. Now, you might fish, you might not fish, you might hunt, you might not hunt, you might not like it, but whatever. I just want to use the analogy around it. And let me tell you, I'm not a fisherman. I don't like the boredom in that. But being a fisherman, you could go out fishing and throw one line in the water, cast one line out there. And what are you going to catch? You might catch one fish maybe over the course of the day. But as a fisherman, if you have more lines in the water, the more lines you have in the water, the more opportunities to catch fish you have, the more of those investors you're going to have around us. Let me give you a couple examples of some ways or some lines that you can have in the water to meet people. We've talked about relationships. And where do you build those relationships? One great place is a networking event. You can go to your real estate networking events, connect with people, meet somebody, take those people, get their name, their information, and what do you do with them? You're going to put them in a database. Now, I'll talk about databases here a little bit more in a minute. But it's really critical that you're outsourcing people, some individuals, to be your business partners, your limited partners. But how else do we find people to connect with? Lead magnets are really great. So I've created an ebook, and I let my coaching clients white label this ebook, by the way, but it's about private capital and how to invest in multifamily real estate. And that private capital piece is really important for people. You could put together an ebook, take mine, white label it, put it out on the internet, and drive traffic to it. You drive traffic then to a form that they have to give you name, phone number, email address, and then you have somebody to call and talk to about investing in your multifamily offering. You can have a checklist. Maybe you have a checklist on due diligence. Maybe you have a checklist on asset management, but checklists are great giveaways to attract people as a lead magnet. But you have to have those lead magnets out there. Networking with people, creating lead magnets. Email marketing is really taking form and taking shape. And this is how you build your database. And as a farmer or as a fisherman, you're catching fish. But then the second strategy is being a farmer. You have to operate as a farmer. So I go out and I meet somebody new. What do I do with that person? How do I stay in touch with them? I want to put them into my database. Once I put them into my database now, what I get the opportunity to do is nurture that lead. So email marketing is a great way to nurture that lead, to build that database. And through email marketing, you're going to do newsletters. Maybe you're going to send an article. Maybe you're just going to send an email every week or every month. But email marketing is a great way to nurture that database. It's another critical point. I realized how important a database was early on. So, quick story. I was in the real estate business, selling real estate, and I had sold these people a home and had lost contact with them. So it was about 3 years down the road, and I'm in the grocery store one day. And when I'm in the grocery store, this woman walks up to me and goes, "Oh my God, how are you? It's been so long." She goes, "We've been trying to find you. We couldn't find you, but I just want you, we're having a party this weekend at our new house." I go, "Your new house?" She said, "Yeah, we sold our other house and bought another one." And now I had sold them a home that was like $450,000. 3 years later, they sold that home for about $650 and bought a house for $800. So look at the sales I missed along the way there, because I didn't have my database up and running. I wasn't staying in touch with my past clients. I wasn't nurturing them. And now all of a sudden, here's somebody I meet that's inviting me to a party at their new house, and I missed a couple of transactions along the way. It clicked to me at that point how important this was to build a database and have a database so that I could stay in touch with people, nurture your database so that people know how to get a hold of you when they're ready to invest. Heard a great story one time from somebody who said they had somebody in their database. They stayed in touch with them for 20 years. Are you willing to nurture your database for 20 years? But after 20 years, one of the investors in the database raised their hand and wound up investing $2 million into one of their real estate offerings because they had watched them and listened to them over 20 years and all of a sudden became ready. So that nurturing part, we're going to be a fisherman. That's strategy number one. And then we're going to be a farmer. We're going to plant that seed, we're going to nurture that seed, and then we're going to harvest that seed. And when we harvest that seed, those investors are going to come and invest in our deals for us. Another way to have a line in the water as a fisherman is to have a book. You could write a book. If you start with an ebook and then build a book beyond that, then you could put that book out there. Now, some of these techniques aren't going to be for everybody, but some people will build them over time. So I know that I didn't write one book right away. I built one book and now I have 3 books out there. So it's over time that we do these things. You could speak at events. Maybe you like public speaking, maybe you don't, but we could speak at events and we could talk about real estate investing or share your story. Everybody's got a life story, right? Most of you know my story. You know my history, that I built $100 million company, lost everything, experienced some prison time, and back building a huge, huge business. And I'm doing that because I love doing what I'm doing, but I get to speak. I get to go tell my story and share it and make an impact on people. And then again, those networking events, very important. I'd have a networking event plugged into my calendar once a week and be going and meeting new people, learning what I could learn and sharing what I could share with others. But talk to everybody you meet, whether it's in an elevator, whether it's at a gas station, or whether it's at the store in the line at the grocery store. I've met a number of people on an airplane flying from city to city, and I've met people standing in line at the grocery store, flipping through a real estate magazine and just asking them, hey, are you planning on selling a home, or do you invest in real estate? Whatever that opening line is for you, just grab those people's attention. Meet somebody new every day, put them into your database, nurture that lead, water that seed, and then harvest it. I want to talk to you about a nurturing process. I read a book one time that is still a very important book in my life. It's by Gary Keller, one of the founders of Keller Williams Real Estate, wrote a book called The Millionaire Real Estate Agent. And there's a section in that book that talks about marketing. And I would suggest get that book, read those 33 pages in that book, but it talks about 3 processes. The first process is an 8x8. And that 8x8 is when you first meet somebody, how do you stay fresh in their mind? You put them on this 8x8 program, and this 8x8 program, you're going to touch them every 3 to 5 days for the next 6 weeks. Send them a handwritten note, send them an email, send them a text message, send them an article, send them a newsletter, call them on the phone. But what you're doing is you're branding in their mind. Hey, when I'm thinking about investing in real estate, I want to call Mike Morawski. I want people to call Mike Morawski, and I'm going to brand that in their mind. At the end of that 8x8, I make a decision how hot that lead is. Are they going to invest soon in an offering that I have, or are they going to be a year or 2 out and then invest in that offering? So depending on that, I'm going to put them on a different program. I have a 12x12 program where they just get a newsletter from me every month. They get my newsletter talking about a case study, talking about a deal I'm working on, sending them to a webinar. Maybe I have an event coming up. Book a call with me. That is just nurturing that database once a month. But then I have a more aggressive program. It's the 33 touch. Twice a month, they're getting a piece from me, handwritten note, newsletter, email, an offering, a webinar that's coming up, another event that's coming up. I'm staying in touch with those people because I know that they're investors. I know that they're going to be looking for an opportunity, investing in an opportunity soon. Building your marketing plan is as critical as building that, nurturing that process to find people, meet people, build those relationships. And one key point around all of this that I want to share with you as I start to close is raising capital is most effective in between deals. Let me say that again. Raising capital is most effective in between deals. So even if you don't have an offering today that you're bringing to the market, make sure that you're talking to people about raising capital. Make sure that you're talking to people about being in the business with you, being your partner, and what that looks like and the types of returns. Put together a slide deck for yourself that talks about your thesis. What's your company thesis, and what are you doing when you do bring a multifamily offering to the table? What types of return? If you want to see a copy of a multifamily thesis, give me a call, reach out, and I will send you our thesis from Resilience Equity so that you can see exactly how that's put together and what we put in there, so that it whets people's appetite, lets them know who we are, what we do, and what we could provide for them to create that cash flow, to create that long-term generational wealth and those tax planning strategies. So if I can be of help in any way to anybody, don't hesitate to reach out. Thanks for being here this week. And you'll start to see more of these podcasts with me just delivering some content and some information, providing you with some resources. So let me just remind you that in between deals is the best time to be raising capital. So the things we talked about today: underwriting, knowing how to underwrite, knowing how to deliver the message and the numbers to your potential investors, building relationships, building those relationships, and then nurturing those relationships. Database marketing, critically important. And let me just share with you what I use for a database. I use a platform called Capitalist Pro. And I just recently converted over to Capitalist Pro and absolutely love it. My assistant loves it. And what it gives us the ability is to be able to put information in easily accessible, be able to build flows and those nurturing programs that I talked about, build those in really easy. So if you're looking for a great platform for your business building, for your nurturing process, for your development of real estate investors and business partners, Capitalist Pro is a way to go. I'm going to suggest to you to reach out to Paul at Capitalist Pro. Those notes will be in the show notes. You'll be able to get that phone number and email. Reach out to Paul at Capitalist Pro and get a free demo. Take a look at what this program can do for you and how it will help you enhance your real estate capital raising efforts. And then that third piece is raising capital, which is something we should be doing every day along the way. Hey, thanks for being here. I appreciate you. We'll see you again on the next episode and look forward to talking with you soon. As I've mentioned, if I can do anything, don't hesitate to book a call with me.
Thank you, Mike, and thank you for joining us for another great episode of Insider Secrets. As always, Insider Secrets is brought to you by My Core Intentions. Wherever you hang out on social media, you will find Mike and My Core Intentions. Please like and follow us to get the most up-to-date real estate investing trends. Visit mycoreintentions.com, where you can get expert coaching on all things real estate investing and property management. If you're looking to become an expert, Mike's coaching will help you scale your real estate investment business. We're looking forward to having you back again next week for more Insider Secrets.